Connectivity is no longer just communications. It is in fact key to Malaysia's growth. Introducing the National Fiberization and Connectivity Plan, a 5-year plan that aims to bring robust, affordable and accessible high-speed internet to all Malaysians. This way, we can all enjoy more economic opportunities and a higher quality of life. U-Mobile fully supports NFCP and wants to enable all Malaysians to realize their unlimited potential. Find out how at u.my/NFCP.
This is a download from BFM 89.9, the business station.
The BFM Breakfast Grill, connecting you to the top people and ideas. Presented by U-Mobile.
I am talking this morning to Arshad Ismail, the President and Group Chief Executive of the country's oldest development financial institution, Bank Pembangunan Malaysia. Arshad, thank you for talking to me. Let's start at the start and discuss what everything is revolving around now, which is COVID-19. How is the bank doing in terms of being exposed to the sectors and companies which have been most distressed by the COVID-19? Obviously, oil and gas and transport would be some of your key sectors.
Good morning, Chuang. Thank you very much. Well, COVID-19 has impacted everybody, and it definitely has impacted Bank Pembangunan in terms of the portfolio we're currently managing. As you have correctly pointed out, we do have exposure to oil and gas, and we also have exposure to tourism. And in fact, we took some proactive measures in relation to the tourism component of our portfolio. Way back in January, we thought that there would be a significant impact to the tourism sector. And we, as I said earlier, took some proactive steps. We sort of made some extra provisions. But as the pandemic evolved, it became clearer to us and everybody else that the problem is going to be a lot bigger than just the tourism sector or the oil and gas sector. And as you are probably well aware, banks and BPMB in general, BPMB and other DFIs in general have been receiving a moratorium request, and we have been evaluating, assessing, and by and large, we've been granting moratoriums to our clients who have been most impacted by this pandemic.
Okay, so let's get into the granularities here. Oil and gas, transport, tourism, no surprises there. You have got exposure to those key sectors. Give us some details. How bad is bad?
Well, I'll perhaps give general details. Obviously, I can't give specifics, bearing in mind that we are a financial institution. But perhaps if you could zoom in on specific issues that you might want me to touch on. In terms of the impact to our portfolio, our revenue, definitely there will be an impact. And again, that's not a surprise. And we are prepared for this. We have done our scenario analysis. We have done our simulations. And the bank, considering our capital base, our liquidity position, we are well positioned to weather the storm, if you will.
Okay, what kind of creative solutions have you been able to offer some of your customers to the extent that you can? Because obviously the financial sector is the front line where industries most hits by distressed sectors are.
Well, we are still in the MCO, so the impact to our customers, I would say, is still in the early stages. And we have to bear in mind the impact of this pandemic will not disappear once the MCO ends. At this point in time, we have basically evaluated all requests for moratorium, and we have been quite flexible. We have granted without being too rigid. We also have to remember that not all our clients are SMEs. In the government's stimulus package, it was announced that SMEs and individuals would by and large be granted automatic moratoriums. In our case, we have taken the approach of granting all customers impacted by this pandemic, notwithstanding these customers not being SMEs, the necessary support in terms of granting moratoriums. And of course, we will be closely monitoring these accounts during this moratorium period. And if there is a need for an R&R to be implemented with regard to specific customers, then we will definitely facilitate such initiatives. But at this point in time, even our customers don't fully appreciate the extent of the impact. And at this point in time, we just want to make sure that we don't add to their problems. We want to ease their cash flows so that they can take a step back and see what needs to be done. In granting the moratorium, of course, we want our customers, as far as possible, to maintain jobs, to keep all their employees.
Okay, so in industry parlance, you mentioned R&R, of which I can only make out one, which is restructuring. What's the other one? And I guess in a more conceptual sense, Arshad, it's quite clear that with development financial institutions, nation building stands alongside profitability as two twin mandates for bankers like yourself. Is there a proposition to allow some companies, which have not been as competitive in the past, to be financially restructured or at least creatively deconstructed?
Well, R&R or rescheduling and restructuring is something that we offer customers who face financial difficulties. And you also spoke about how banks focus on profitability. And this is, if I may, something that we have spent a bit of time thinking about. And we have put in place a 3-year strategic plan. And one of the things that we have looked at in this strategic plan in terms of how we as a DFI want to behave going forward is the way we look at profits. And typically a bank pays a lot of attention to how much money it makes. And that is something we are changing consciously from focusing on how much money we make to what impact we are creating for the nation. And I will speak more about this as we go through the interview.
Well, as you reform the business plan, more on that later, but before you can reform the business plan, one must get one's house in order. And I think the question really, as it stands right now, Arshad, how many of your customers are in a situation where perhaps they should not make it past this point because they were not competitive to start with? And I want to reference the global financial crisis, where many zombie institutions were still allowed to carry on, having been bailed out by their respective governments on grounds of national security, but were actually just protection for some other inner coterie of insiders.
Well, if we were to look at financing proposals purely from a commercial perspective, then we would have the luxury of walking away from many projects. However, we also have to look at it from the perspective of nation building. It does not in any way mean that we give free money. I'm not saying that in any way. But what it means is that we would take a slightly different perspective with regard to projects that might pose a higher degree of risk, but still have a significant contribution to the national agenda or the national landscape.
Well, I want to reference your predecessors and their management teams and their risk assessment teams having awarded substantial loans to certain projects in Langkawi, which were owned by Tan Sri Peter Sondak, who is said to be a close friend and advisor to the former Prime Minister, Datuk Sri Najib Razak. Do those practices continue? And if not, how do they evolve?
Well, I'm not able to comment on specific accounts, but when it comes to internal processes, there are two basic components. One, as the name suggests, the process itself, and two, the people involved in implementing the processes. And as far as our processes are concerned, we have refined and enhanced our processes from a risk management perspective, from a credit evaluation and credit approval perspective. No one person in this bank can decide to grant financing to anyone. There are checks and balances in place. And I'll give you a very simple example. The management evaluates all credit applications, and we have the authority to either approve or reject. If we approve, then if the financing proposal is of a certain amount, we would still have to submit these proposals to the Board Credit Committee for review and approval. And the Board Credit Committee still can overrule our decision to approve. However, if we at the management do not approve a particular financing request, then the board cannot step in and approve in spite of our rejection. So there are basic checks and balances in place. And the second component, as I mentioned earlier, is the people. And we are constantly enhancing or upskilling our people in terms of credit processes. And there is a major initiative that has been in place since middle of last year with regard to enhancing our credit value chain. And this relates to the process of originating transactions, the process of putting together the credit paper and taking it all the way to the committees for approval, and then monitoring the transactions during the life of the financing. That is something we have implemented, and we are in the final stages of completing these enhancement processes.
Okay. I'm talking this morning to Arshad Ismail, the President and Group CEO of the country's oldest development financial institution, Bank Pembangunan Malaysia. We'll come back after this, Arshad, to discuss the business plan, the risk framework, and the new government in place, BFM 89.9.
You are listening to the BFM Breakfast Grill, brought to you by U Mobile.
I'm talking this morning to Arshad Ismail, the President and Group CEO of the country's oldest development financial institution, Bank Pembangunan Malaysia. Now, last year, April, when you came on board, you announced the 3-year strategic plan, Arshad, and you wanted to move forward from a past that was obviously riddled with allegations of corruption and dubious banking processes. You also announced plans to evolve into a policy bank whereby, as you said earlier, a few minutes ago, Arshad, that returns would be measured in terms of return to the country and not necessarily financial metrics. The problem with issues of this, where it's something as nebulous as a strategic return to the country, has sometimes projected for people of the inside circle. How do things change from here on in?
Thank you very much, Chuang. The business plan or the 3-year strategic plan we launched was not in April. I joined in April, that's correct. But the strategic plan itself was finalized and launched sometime in October. So it took us a bit of time to, put our heads together, look at the various issues and come up with the strategic plan. And like any plan, it is a plan that will evolve. It cannot be a plan that is cast in stone. That would be a mistake. Having said that, one of the key changes to the way we propose to operate is to evaluate the impact the projects that we are proposing to finance will have on the nation. And it is not a very subjective concept. We have a framework in place. And this is a framework we developed together with the World Bank. Again, we have brought in expertise from people who have been doing this for some time. And as you probably know, the World Bank has been looking at impact financing for some years now. So we decided to basically learn from people who have been doing this. And together with the World Bank, over a period of 5 to 6 months, we developed a framework that will help us evaluate every project to determine the value of impact it will have to the nation. And we have anchored this framework to 5 of the UN Sustainable Development Goals. These 5 goals are goals 7, 8, 9, 10, and 13. 7 is in relation to affordable and clean energy. 8 relates to decent work and economic growth. 9 relates to industry, innovation, infrastructure, and so on. 13 relates to climate action. So these are the 5 UN Sustainable Development Goals that our project evaluation framework is anchored to. And every financing proposal that we receive will be evaluated using this framework. And we will then understand the level of impact a project will have based on this framework that is anchored to these 5 UN Sustainable Development Goals.
Okay, so Arshad, I think the problem lies in not so much in how it's anchored by, but the people who back it and who are behind the scenes in terms of ownership. In your bank's previous incarnation, where it approved loans to hotels in Langkawi owned by Peter Sondak, or media networks owned by Kenneth Iswaran with Asian Broadcasting Network. Those can easily be anchored to key strategic multipliers for the country, but it doesn't have a close examination or scrutiny of the people behind those projects. How do things change in this current incarnation?
Chuang, as I said earlier, we acknowledge the issue, and we have gone through the process of enhancing the internal risk management framework and the credit evaluation framework. And these enhancements, I'm confident, will help us make informed decisions, will help us make good decisions. And there are also checks and balances in place. Even if I were to decide to approve a financing proposal for a particular customer, I really won't be able to do that because I would still have to take it to the board committee, and the board committee can easily turn around and reject whatever financing proposal my management team might have approved. So valid concerns, but I'm confident that we have processes in place, checks and balances in place to ensure that whatever decision we make will be in the best interest of the bank and our other stakeholders.
I'm talking this morning to Arshad Ismail, the President and CEO of the country's oldest development financial institution, Bank Pembangunan Malaysia. Now, with all banks, Arshad, it's all about the risk framework and all about the governance, and the boards of directors are no less important than management of the bank. Now, as we know, we've got a new government in place, and the government in place has been replacing key heads and key positions in GLCs around the country. Is Bank Pembangunan safe from this culling? In fact, is your job safe as well, Arshad?
Well, that's not a question for me to answer, Chuang. At this point in time, our focus is to look at the problems our customers are facing, and also to look at implementing the 3-year strategic plan that we developed last year, and we are now in the process of executing.
Okay, well, I guess the quality of your book really can best be exemplified by your loans loss provisioning and your good loans to bad loan ratios. As of 2018, your bad loan ratio is 11%, higher than the peer average among DFIs of 6%. Obviously, it's been on a downward trend since then. What kind of visibility can you provide for 2019, and I think more importantly, for 2021 and 2020 going forward?
Well, if you look at our, again, based on details I'm able to provide, if you look at our exposures that we onboarded over the last 2 to 2.5 years, even before I joined, you will see that the quality of that segment is relatively good. Now, what this indicates is that since we made changes to the onboarding process, since we made changes to the way we evaluate credit, the impact has been positive. And of course, it'll take us a few more years to see the full impact of all these enhancements. In terms of our capital buffer, we are very healthy. Our RWCR is in the mid to high 30s, and by any measure, that's a very comfortable position to be in. Some might say that we are not using our capital efficiently. However, I would counter that by saying that when you look at the nature of our portfolio, where we have chunky exposures, it's very important for a bank like Bank Pembangunan to have a healthy capital buffer. And that will see us through this pandemic, this situation as well.
Well, obviously, the profitability of Pembangunan is very important because you are wholly owned by the Minister of Finance, and the country needs funds more than ever before. What kind of details can you give us in terms of your outstanding loan book, and I guess the growth, if at all, for 2020?
Well, of course, the growth of the loan book has been impacted. We had a number in mind at the beginning of the year, but we recently reviewed that number in the light of the current pandemic, and more importantly, the MCO. The MCO and the length of the MCO will definitely have an impact on the profitability of many of our customers. But that is secondary. At this point in time, we need to do what we can to support our customers. And once the MCO ends, we will see what we need to do to help them recover from the challenges they have faced during the MCO.
Okay, so the last amount for loans outstanding was 19 billion ringgit. What kind of number can you give us in terms of your loans outstanding, Arshad? And I think more importantly also the outlook in terms of provisioning for loans that might go sour.
Since that number was published, it has reduced a little bit due to significant redemptions last year. These were planned redemptions, so that impacted the overall value of our loan book. This year, pre-MCO, we were hoping to grow the loan book by a modest number. And with the revision, we still expect to see a more modest increase in the loan portfolio.
What about provisioning? Because a lot of analysts and experts reckon that the losses facing the energy industry and the aviation industry could run into the trillions. Now, obviously, with your exposure being much more chunky because you are completely enterprise exposed, Arshad, what kind of provisionings are we looking at for 2020?
Well, the significant majority of our portfolio is exposed to infrastructure, and a lot of it is linked to government projects. So that, of course, gives us some comfort. But of course, we also have exposure to oil and gas and tourism. In the case of tourism, as I mentioned at the beginning of the interview, we had taken proactive measures and sort of made provisions even before the MCO started, and that will definitely help us. In fact, for the tourism portfolio, we had proactively provided in excess of 50 million ringgit by way of provisions. For the other segments of the portfolio, this is something that we will be evaluating as the situation evolves. But definitely, we will be seeing more provisions. I think that is a given.
Well, of course, pre-COVID provisioning and post-COVID provisioning are two different things. And to reference the American banks, I think Bank of America and Wells Fargo increased provisions by as much as 7 to 8 times what they provisioned a year ago. Are these kind of numbers within the realm of for example, your DFIs in Malaysia, Arshad?
No, in the case of the provisioning in relation to our tourism portfolio, it was done with COVID-19 in mind. But we did it proactively earlier in the year. We took the worst case scenario, and we have also done scenario analysis. And based on the worst case scenario, we still expect to remain robust. Of course, not in line with the initial projections.
Okay, well, Arshad, thank you for talking to me, and good luck with the plan. It's challenging times for everybody, and no exceptions for Pembangunan as well. Thank you for talking to me. I was talking to Arshad Ismail, the President and CEO of the country's oldest development financial institution, Bank Pembangunan Malaysia, BFM 89.9.
The Breakfast Grill is brought to you by U Mobile, encouraging you to stay home during this period of movement control.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.